Hi there, keen traders. It has been an interesting day. We've had complete reversals of the moves that we've had the last few days, and we have choppy markets right now. So what are we going to do? And what's our plan here? Well, let's start out though and look at the fib setups, because we did have a fib setup in the Great Britain AUDUSD last night that I traded in, and it did not work out just as planned. And we had reverses. I called for the reverses in the yen pairs. That's why I didn't do the fib trades. I obviously didn't expect them to be that aggressive, or I would have just jumped into there. But basically, we have range trading right now, and what we're going to have to look for is a way to play these ranges. But let's take a look at this pair. We had the larger move down in the Great Britain AUD, and it moved all the way down to what the 180.14 level, and then we had basically this entire turnaround today. And what we were looking for, I was actually a little bit more cautious on this move. I was looking for a move up to the 0.618 fib, which was at 182, or even more conservative than the 50 fib. And what we had here is we had a push up to the 0.618 fib at 182.13, but like I said, I was waiting for a red bar, and boy did we get a red bar there at 4:30. And then it looked pretty good, and I put an order in. I think it was at 182.25 because I wanted to have my stop above this 182.65 level, and it nailed it. It went right through it, actually. 25 right up to 55, and then slow creep higher, and then it continued to close it out. And you can see right here, basically what we had is a complete reversal of the day before trades. So what can you do there? There's really nothing. There was no error made in that trade or anything like that. I guess you could say if we were using the 50 fib level, this move would have actually moved up higher than the 50 fibs, and maybe I wouldn't have done it, but that's not the only time a trade is really negated, is if it moves all the way up to touch the 1.272 fib level. But we do have volatility, and that's a good thing. So let's look at this Great Britain AUDUSD thing up on a one-day chart, and you can see that that's a pretty aggressive reversal there. And what do we have here? Well, like we said yesterday, that the pair had key support. Now, let me just pull this up. What do we have there? Well, you can see that the pair had broken this key support level, let's just say at 82.50, and now the pair's back above that 82.50 level, so we could be right back in this range that we've been watching between 82.50 and the 87 level. So we'll have to see what we get there. But right now, right here, what will I be looking for tomorrow? In this pair, I'm not 100% sure, because with these giant reversals, I mean, if we look at on a larger term map, we could see that once we get up to this level right here around 83.50, we could see a pushback down, and we'd be looking for the 50 fib of this entire move, if that's what we were so inclined. I'm going to have to think about that, and I will post that out there when I do the review here at the end of the day. I would almost be inclined to wait to see if we get a little bit of a consolidation, and then maybe a bounce higher, because obviously the pair is not really 100% sure what it wants to do right now. Great Britain, New Zealand, if we look on the 15-minute, this guy would have been didn't really do anything, but it has quieted down below this ascending trend line. So on this pair now, I am favoring pushes to the downside at this point. So we'll have to see. If we get that price action for that push lower. Now let's look at why the Great Britain AUD did what it did. And by that, we'll look at the pairs that make up the Great Britain AUD. First being the Great Britain USD. Great Britain USD, you can see that didn't do too much. It just basically sat in its range. But the Aussie, on the other hand, it pretty much broke down from its gains from yesterday. And let's look at the 4-hour chart. Broke down its gains from yesterday, and then continued to push below the 90 level. The 90 level is what killed the trade that we had in the Great Britain AUD, because you can see when we had that spike lower below that, that was basically the end, the knife in the grave here, or I guess, and that was the end of the game. Now, what I would bet in this pair is that it will bounce back up to be right around this 90 level, so you won't really be able to make any if, ones, and heres. This is why the stacker has been difficult at best lately, though, because I don't do the stacker in the Aussie because it isn't very consistent trending, but you can see that would have blown out the trading right away. Let's look at the yen pairs if we're going to talk about fib trading. You can see that today in both the yen crosses, they both also had basically retraced yesterday's move, and we're either seeing a break in trend here, or we're seeing actually the Great Britain JPY actually built on its move. But you can see that I mean, it didn't build on its move. You can see we're either seeing a reverse on trend here because this pair is looking to get a bounce of this trend line, or we're seeing just choppy markets, unsure and without direction. And I'm pretty sure that that's what I'm thinking that is going on right now. And what's going to cost us to have direction in the short term, I guess, when more traders come into the market, which would probably, I thought it'd be this week, and maybe it'll be after Martin Luther King, or it could be the Fed, or who really knows. So let's look at the stacker trades and let's look at the majors and see what we have going on. And actually, we'll look at one harmonic play that I've been checking out today because I like the way it coincides with everything. We'll check that out first. The Great Britain USD. Let me just pull it up. There we go. The Great Britain USD today. Oh my gosh, there's a lot of stuff on this screen. We had this trade pegged out forever ago, and we had the remember I told it, well, it's a butterfly trade, and when you look for a butterfly, you look for a reversal between the 1.272 and 1.618 fib. And what I like about this trade is that bam, that is right in this resistance zone that we've been watching here between 165 and 166. So what we're looking for now is, you can see that the pair pushed down, basically touched that first target at 163.80. Now it's trying to bounce off the fib. If we get a push up towards this the top of this range at the 165, I don't know, 165.40, same thing, same trade setup I was doing last week. If we get a push back up to that 164 area, I would be interested in topping this trade in for a 30 pip stop. What do you have to lose? We could get a push down all the way down to the 163.30 level. So the thing with the harmonic trades, there's a lot of them, and you can get pretty nice rewards. The risk reward is great, and so you don't have to win every one. But what's interesting about this one is you're looking for a little bit of confirmation on this, and the divergence. Right now we have a little bit of divergence on the RSI. So what I would look for is a slow gradual push back up to that level, get back below this RSI level, and then we can see a push back down to the 30, and that is the setup we're looking for. That I will post that all on the blog, obviously. So let's look at the bigger pictures. What we have is the EURUSD. This guy is, where are we? The EURUSD. This guy is in a wedge, or a triangle, excuse me. It's in a wedge and in a triangle. And if we want to look at the top of this triangle, we need to go way back, man. And you can see that this is basically a trend line from 2008. 2008. Are you kidding me? We're talking about a 6-year trend lower in the euro from the top, which was what, at this 160 level, and then slowly but surely we're down at 139. This is going to be telling. If we get a break of this level right here, right now, you know, that would be a fundamental change. I mean, so if I had to guess, and gosh, I've been guessing that the euro is going to go lower for eternity. If I was going to have to guess, I would guess that we were going to get a break to the bottom and keep going, but who knows? The data out of the U.S. has been very lackluster, and we could see a continued push lower in this pair. So what we're going to see is we're going to be watching for a break of either the 136 basically or the 139 level. Just watching this range inside here to hopefully jump into a stacker setup. In these crosses. We had the two break-even setups last week in the Swiss franc and the euro. At one point, the Swiss franc it was up very well at one point, but we didn't, you know, that's not, we're not looking to get 50, 60 pips here and there. And the Swiss franc, if I remember, was at 90.15 the entry points. So what we're going to look for is a break of this range in either direction. We could, if we get another push up higher here, jump into the stacker trade to the top side, just hoping to get a break of that, and we'd move it to break even once we get that first day. But to get in the stacker on the bottom, we're going to have to see a break of this 135.50 level, and it could be to benefit to play the inside of this range. Because I mean, look, it's the 14th now, and before this is really going to get narrow, it's going to be the beginning of February, and it might take what would be coinciding with that would be the FOMC decision that could push us out of that range. The Great Britain USD, same thing. This guy's a bore fest. I mean, Jesus, this thing has been sitting for 2 months in this little tiny friggin' range between 162 and 165. We can't do anything with that. We couldn't do anything with this. So basically, since September 18th, this pair has just been chugging along, happy to be there, just drifting sideways. I mean, I guess it has moved up 159, 700 pips, but I mean, it's not a tradable 700 pips. This is range bound. You could have jumped into this range here, and then at this point right now, there's really absolutely nothing you can do with this. We need a break of either this 162.50 or the 166, or a reversal at least one at the bottom of the range or the top of the range that we can jump into and get something going. Swiss franc, I mean, God, we've seen this story before too. It's right in the trend line lower. If everybody remembers, this was a consistent trend line move lower in the pair, and we'll have to see. I mean, at this point right now, we had to push lower. You can see that was 90.18 and went down to, I mean, that's a 30 pip move. That is not worth jumping into. And right here and now, I am also not going to jump into the 50 pip pullback. I would still play the broader range if we get a pullback up to here maybe. So basically, once again, we need a break of the trend line or push higher in the cross, and we're just not getting the volatility that we need. So let's look at the other pairs though. The Aussie USD was basically hovering around the 90 level. We all saw this move. We had to push down lower up to 90, and then we were looking for a hold of 90, and then we could build on gains up to 92.50 and so far. But this 90 level is very key at this point, and we'll have to see what we do from there. Break back down, and we're just right back in this zone, and there's nothing we can do with that. Now the New Zealand, we all know this one. We had a nice break yesterday, broke out above this 84. We're just sitting right about there. On any initial break here, you could have been playing for a push up to 84. That would be your first target, but more realistically, I'd be looking for a move up to 84.50. So there is a certain risk reward if we wanted to. Let's see right here. You could go long right here and just have your stops a little bit below there at 83, say 83.60 or 83.55, looking for a continued push lower. It's not really what I'm looking to do. I'm not very confident jumping into these drifting markets at the moment here unless I have a quality setup. USDJPY, same thing, pretty much solar reversal. The pair is right at 103.75, and we all know that is the trigger level. So all in all, let's just go through what we have here. We have the EURUSD watching this at 136.85, and we have a range from the triangle from 39 to 36. The Great Britain, we all know this thing is just moving sideways. We have a resistance zone at 66.65, and then support at 162.50. Nothing you can do there at the moment. Swiss franc riding the trend line lower, can't grab any momentum in either direction. Probably that looks like it was probably a 50 fib pullback, but it only moved down 30, and it was still in the range. We needed to see a break of that range to really get interested in that pair. So not interested in this setup. We need a trend line break or a confirmed move back up above this 91.28 in that cross. New Zealand, it's all about 84. It's holding, it's sleeping there. And there's so many pairs right on their edges right now. Aussie is right there on its edge at 90. The JPY at 103.75. The EURJPY is sitting mid-range, but just interesting how it has basically become comfortable at the shorter range around 141. And the Great Britain JPY, if we want to look on a daily, very similar setup. It's back above that 170 level, which is key. And so there's a lot of looking and staring and giving people a little bit snake eyes here right now, but we just need to wait for the setups to come to us. Can't get too hasty to jump into things here. And I will be looking for harmonic setups from the short term, but we just need to have them come. All right, everybody, good luck trading. And like I said in the said, I'm going to probably start doing the currency watches on Tuesdays and Thursdays because I have become in the habit to go over exactly what I said, and a lot of people aren't paying attention too much. But I think once or twice a week, it would be beneficial to have hear somebody giving a little bit more insight, because you can apply what you want from what people, the way they say things, and the way that things I'm stressing more so in the video will give you a better idea of what I'm actually looking at. All right, everybody, good luck trading, and see you in a bit.